General Motors, John. So take a look at Tesla, take a look at General Motors, and the only reason I put these two together at all is within the US, General Motors is the one that they think will be the number two automaker of EVs in the next decade, give or take. They're saying 2022 to 2030, they're going to be right up there with Tesla and competing head to head. So far, it has not happened at all. I mean, just take a look at those numbers this year. But somebody seems to think that this is going to be something. Tesla was 211 2 months ago. Now today it's what, 141, 142, somewhere in there, John. And meanwhile, GM was 35 2 months ago, got up to 41. Here we are at about 35 again. Somebody seems to think that maybe this is sort of a floor and there's a little bit of room to the upside. They are buying the February 36 calls for a couple of bucks, $2.07, 10,000 of those getting bought today. And they're actually spreading them off. Now, here's the one caveat for me. I don't really like spreading it off because of this reason, John. It doesn't really allow you for what you really need of 3 or 4 multiple when I'm looking at the spread. So they're buying the 36s, selling the 39s. It costs about $1. So it's very, very close. But you know what? I just don't like that risk reward right now. I think you have to have a little bit better. But I love what we're seeing out of GM right now. So I think the better trade is just to buy it for now and eventually spread that off if we get a nice move to the upside, which potentially we could out of GM. I do think that the upside is probably somewhere close to where it was before. Maybe it gets up close to 40. I think that would be a great opportunity there. So I like what we're seeing in a day where most of what we were seeing was very, very bearish. This is one of the bullish calls that we were seeing as far as the unusual option activity.